All right, friends, it's time to read the tea leaves in the Denver and Boulder real estate market again. And a quick rant, but with love, the market doesn't reward perfect plans. It rewards smart execution. See, here's the truth nobody likes to admit. No one gets complete information in real time. The only way anyone knows the market is shifting is after it's already shifted. So the goal isn't certainty. The goal is making the best decision you can today using the best signals available. Most people obsess over the lag measures, the stuff that makes the headlines. It's median price, days on market, months of inventory, closed sales. Those are real, but they're delayed. What I care about, and what I coach my clients to watch, are the lead measures. The early signals that show up before the headlines. How many showings per week, days until the first offer, the strength of the offers, whether we're seeing competing offers anywhere. See, the lead measures tell you what buyers are doing right now, and what buyers do in real time become the lag measures later. So today, I'm going to give you the lag measure snapshot for December, and then I'm going to translate what it actually means for buyers and sellers in the next 90 days. If we haven't met, I'm Stu Galvis with the Galvis Group, and I've been doing this for over 20 years and been a part of about 850 transactions. I'm not here to predict the future. I'm here to spot patterns early and help you make smart moves. Here's the December 2025 snapshot, Denver Metro versus Boulder County. In Boulder County, active listings are up to about 1,208, which is 12% higher than 2024. And at the current rate of buyer demand, that represents 3.4 months of inventory, which is also 10% higher. 262 homes sold in November, which is down about 11% from this time last year. But what's interesting is that the median sales price is up about $770,000, which is 6% higher in Boulder County. With that said, that represents about 95.5% of list price, which is also down compared to 2024. And the median days until these places sold is up 26% to 67 days. In Denver Metro, we're currently sitting at about 2,600 active listings, which is 8% higher than last year. And at the current rate of buyer demand, we're at about 3.5 months of inventory, which is up 13%. In November, 593 homes sold across the Metro, which is down right around 15%. And of those that sold, the median price was $575,000, which is also down, but only by 2%. And that's about 95.5% of the original list price, which is also down over last year. They're selling at the same speed as last year, though, right at 34 days on market before they went under firm contract and sold, which is basically the same timeline we saw in November 2024. So what does this tell us? Number one, inventory is up. That means buyers have more choices, sellers have more competition, and the leverage shifts toward the buyer. Number two, fewer homes are selling, and that means fewer buyers are active, but the buyers who are active are even a little more hesitant. Number three, and this is the interesting part, Boulder is behaving totally differently than Denver. In Boulder, the median price is up even though we had fewer sold homes. The translation is that the best homes are still selling and they're selling for higher prices. This can be a leading indicator that buyer demand could surge in Q1 in Boulder because what's moving is the shiny penny stuff and the average stuff is sitting. Denver, sorry friends, we don't have that same evidence yet. In Denver, the median price is down and the average home is feeling the softness. Number four, buyers are negotiating harder. Sale price as a percentage of list price is down, and a lot of that's driven by price reductions and tougher negotiation on homes that don't sell quickly. And number five, days on market are up, especially in Boulder. That's buyer reluctance plus higher supply, and the compounding effect is that longer days on market creates more motivated sellers, which makes buyers even more hesitant, which drives value down further for the homes that aren't the cream of the crop. So what does this really mean if you're buying? You still have more options, you've got more room to negotiate, and less aggressive competition than we've seen in a while, unless the home is close to perfect. I've had 2 buyers in multiple offer situations in the last month. One chose not to compete because they wanted the perfect deal, which is a very common buyer mindset right now, but it doesn't exist. The other buyer did something smarter. She went after the nearly perfect home, but still came in below asking and negotiated enough of a seller credit to buy her rate down to 5 1/8. That's the move. Translation, you don't have to sprint at every house. You have to sprint at the shiny pennies. And with the less than perfect homes, you can be strategic and create a great opportunity. What it means for sellers, is if you're selling or relisting, especially if you've already expired on the market once or more times, here's the blunt truth. The throw it on the market and see what happens era is over. When I say picture perfect, HGTV ready or shiny penny, I mean the same thing. The home is prepared, presented, and positioned so buyers feel confident and emotionally bought in when they tour the home. These homes are still selling quickly, often in 1 to 3 weekends, and they can still create competing offers. The average home, it's getting punished. When inventory rises and sales slow, the best prepared, best positioned home wins big. So here's the new seller playbook in 3 words. Price, present, market. You price it right, smart and strategic, because the next one to sell wins. You present it right because condition and staging make all the difference. And you market it right because with the right story and the right distribution, it creates buyer urgency. Now, quick Q1 2026 forecast, no crystal ball, just patterns. For the last 4 years, Q1 has been one of the best times to list and sell in most front range markets because inventory is typically at its lowest and the buyer activity spikes before the spring inventory floods in. A lot of annual appreciation in our markets happens between January and May. So what I expect is that buyers are going to stay selective, especially in Boulder, but they'll get more aggressive on the best homes, especially if rates stay within about a quarter point of 6% or lower. Negotiations will stay normal to firm. If a home misses in its first 1 to 3 weekends on the market, it loses momentum. The great homes still move fast. Location, condition, staging, and smart pricing wins. And spring, winter start now. The sellers who do their prep for Q1 have already beaten the people with the whole list in May because that's the best time, right? Buyers should be ready to move fast on the shiny pennies. Sellers should use their time now to prep and launch strong. So if you're ahead of rising inventory, you'll sell and you're not going to be chasing the market down later. So pick your lane. If you're selling or relisting in the next 90 days, book a quick strategy call using the link in the blog or text SELL to my number and I'll send you my simple plan for pricing, prep, and launch. If you're buying and trying to win the shiny penny without getting emotional or overpaying, book a buyer strategy call or text buy and I'll send you my simple plan to win the right home. All right, that's December. Read the tea leaves, watch lead measures, and execute smart. Again, I'm Stu Galvis and I sell houses. It's not magic and it's not the market, it's science.